If you've just started a consulting business or you're about to, here's something nobody warns you about. You'll be hit with a wave of new business terms. Understanding them will determine whether you land that first client, get paid on time, or even stay in business. It's like meeting your fiance's family for the very first time, and then her dad starts explaining his golf handicap in detail, and you're nodding along, not because you get it, but because you're hoping nobody notices that you have no idea what he's talking about. Over the next 20 or so minutes, I'll walk you through 50 must-know terms every new entrepreneur should master, so you can skip the confusion, speak the business lingo, and never feel like an outsider. I know that feeling all too well. When I started my first business after a devastating layoff, I had no idea what scope creep, GTM, or CAC even meant. I learned the hard way, but over time, I built 7 businesses, some to 7 figures, and 1 to 8 figures, which was acquired in 2019 by global media giant Dentsu. I want you to avoid the mistakes that I made and the embarrassing moments that I had. So let's dive in. Consulting basics. Consulting means selling your expertise. Someone is paying you because they need something that you know or can get done better than they can. Sometimes this involves providing a tangible service, and sometimes it is just advising. Which brings me to the second term, advisory. This means providing guidance without any kind of hands-on service attached. Let me give you an example. In human resources in HR, an advisor might review hiring strategies and flag risks in a company's policies. Consulting would actually include designing and training on the interview process and writing job descriptions. Subject matter expert, SME, SME. A subject matter expert, a SME, is usually used as a term internally to a company. It is the person who knows a lot about a specific subject on which you, the consultant, you're going to base a service, a course, or an asset such as an article or a video. Folks, to make it easier for you, I've put all the terms into a Google document called Fluent in Business Cheat Sheet, so you can download a copy and then customize it for your own business. You'll find the link in the description. The market for your service. Before you go out and sell your services, you need to have an idea of who you are selling to. Let's start with niche. Niche. I'm not sure. Niche sounds fancier. So niche is a metaphor. A physical niche is a little recessed space in a wall for something like a small piece of art. Your niche as an entrepreneur is the small space in the vast ecosystem of business where you fit in and succeed. They say if you sell to everyone, you sell to no one. So you have to niche. But when you're starting out, you don't need to overcomplicate niching. Identify a reasonably specific audience, but let the market help you refine it. In other words, allow real conversations, real feedback, and real traction to shape your niche. That's how you discover where the true demand lies. Target market or target audience. Target market is related to niche, but it focuses on the portion of the overall market that your consulting services are intended for, rather than the services themselves. ICP or ideal client profile is like target market and niche, but considered from more of an individual perspective and probably a bit more specific. I know these 3 terms are interrelated and could be confusing to understand, so let me walk you through an example. Niche, you run an Aikido dojo, not karate, not BJJ, not boxing. Target audience, adults who want self-defense without the hyper-competitive vibe. ICP, a 35-year-old professional who's stressed from work, values discipline, and is looking for a weekly outlet to train and grow. Now, what I want you to do is the following. Pause the video and think of your own niche, your own target market, and your own ICP. And if you're having difficulty defining these, leave me a comment. I'm happy to look into it and be of help. B2B, B2C. B2B means business to business. You are a business selling to other businesses. For example, you have an accounting firm and you sell accounting services to other businesses. Now, on the other hand, B2C, you are a business selling to consumers. For example, you have an accounting firm and you're selling accounting services to individuals. B2B versus B2C is a real distinction. Sales processes for the two are very different, but you do want to remember that at the end of the day, it is always one or more real people making the buying decision. Your business model and your offer. Let's start talking about the terminology for what you're going to sell and how you're going to make money. Business model. A business model is the plan for how your business creates value and generates revenue and profit. And then who you serve, what you offer, and how you get paid. Revenue stream. One of the ways your business can make money. For instance, if you have a tech consulting firm, one revenue stream could be reselling. You resell a tool or a product or a software. And then another revenue stream could be tool implementation or maybe training on the tool. We talk about these concepts coming up. Pain points, the things that are costing your target market time, money, and or headaches. And that's where you can sell your service because you solve these problems. You address these pain points. Unique value proposition. This is the factor or combinations of factors that helps you and your offering stand out in the marketplace and compete effectively. This is sometimes called unique sales proposition, but unique value proposition is better because it's from the perspective of the customer. Your UVP could be about speed and efficiency. You deliver results faster than competitors, or it could be amazing premium client care. You provide a white glove experience and charge accordingly. Now, underline that last part, charge accordingly. Proof of concept, POC. A POC is just a small trial to make sure something works in some way from a technical standpoint or as a business offering before you fully commit. Productization. Productization means treating a service kind of as a product, same offering, same price, and minimal customization. A reminder here, this is a glossary, so I won't get into a ton of detail on each term, but check out my channel at Startup with Ferris for deeper dives on basically all these topics. Back to the terms, reselling. This is one I know really well. It was an important part of the consulting business that I sold to Dentsu. We became the #1 reseller for Google in the analytics space at the time, and that was very attractive for the buyer. Reselling means that you sell and often service and customize a product or a tool that is produced by a third-party company. White labeling. White labeling is when you are a reseller and the producing company allows you, as a reseller, to put your own company brand on the product or technology. I remember when we were selling web design services, we also sold website hosting services. We identified a reputable hosting provider and white labeled that service under our own brand, and we established a nice monthly recurring revenue stream off of it. And by now, you should know what a revenue stream is. If not, go back a couple of minutes earlier. Go-to-market GTM strategy. It's your action plan for how you'll introduce your service to the market and how to win clients. It covers who you are selling to, what you're offering, how you'll reach them, and why they should choose you over others. Now, drop a term in the comments if you've been hit with that term and had no idea what it meant at the time. Pricing. Pricing can be a heavy topic, but when you're just starting out, know some of the terminology and don't stress too much about pricing. It's more important to just sell. Break even. The point at which you're not yet making money, as in profit, but you're no longer losing money, which is how many businesses start out. Break-even point can also apply to a specific product or service relative to the investment you make in developing it. Scope creep. If this term sounds scary, It should. Scope creep is when your client asks for a little more or a lot more on a fixed price project and you risk losing money. This is like your fiance's family inviting 150 people to your wedding, but you had agreed with them to invite 100 guests only. You have to deal with that situation. Don't come back to me for advice on weddings. I can help you on business, but I can't help you on wedding planning. A pro tip here. Don't be so vigilant against scope creep when you're just starting. Please the client and get the testimonial and get that referral. Now, if you're new to pricing or you're looking for a refresher, check out the Ultimate Guide to Pricing Models and Strategies, where I cover hourly, project-based, fixed-based, value-based, retainer, tiered, and others, as well as specific pricing strategies to help you not just sell, but do so profitably. Marketing, in the next section on sales, is where a lot of new founders struggle the most. So pay close attention. Call to action, CTA, the thing that your marketing materials, website, or social media is asking someone to do. For instance, the main CTA on your website might be to submit a form for a free consultation, which would turn the submitter into a lead. Now, my CTA call to action to you is to hit the like button, subscribe to the channel, and share if you're finding this material helpful. Let me know how else I can be of help. The next term, social proof. Ratings and testimonials from current and previous customers that independently confirm the quality of your service. Lead generation. This is the sum of the marketing activities that get you the name and information about the people who express some kind of interest in your service. Lead gen, often called, can happen through an in-person chat, an online interaction, or a website form submission. Conversion rate. This is the percentage of people who complete a call to action, a CTA. For instance, if 2 out of 100 website visitors submit the free consultation form, your visitor to lead conversion rate is 2%. Or if you have 10 qualified leads and you closed 3 of them, you have a 30% qualified lead to sales conversion rate. Customer acquisition cost, CAC. This is pretty self-explanatory, though not always easy to calculate. How much it costs you in marketing and maybe sales expenses on average for each deal that you close. So if you paid $2,000 for a marketing campaign and you got 5 customers, CAC is $400. Sales is even a bigger challenge than marketing. And it is the one thing I struggled with most when I was just starting out, because I had 0 sales experience and I had to learn from the ground up, and you can too. So understand the terms and concepts, think about how they apply to you, and put them into practice. Lead qualification, the process of determining how serious and able a lead is to get to a closed sale. Spoiler alert, many leads aren't a good fit. So it's critical to qualify them and waste as little time as possible on the duds. Prospect. Lead and prospect are sometimes used interchangeably. In some businesses, a prospect has provided more details or shown more interest and is therefore considered more qualified. In your business, as you're starting out, my recommendation is to use one term and define that term the same way consistently. Woohoo! We're at the halfway point. Hang in there. I know it's a lot of definitions, but this isn't trivia. These are the terms that decide whether you sound like an outsider or like a pro who belongs in the room. Stick with me, as the second half has some of the most powerful terms you'll use to actually win clients and grow your business. Sales funnel. Sales funnel is a metaphor for the stages that you help a customer move through, from the time they raise their hand as a lead to the time they close a deal. Although I talk about the sales funnel in a linear way, I do it to simplify the concept to folks who are new to sales. But each funnel will look different for each prospect. Customer journey. Customer journey is basically all marketing and sales touch points that a person experiences to become one of your customers. It's all these touch points that they have with your brand. This term keeps the customer rather than you as the main character in the story. If you support, satisfy, and help them navigate the journey, they're more likely than not to value you, trust you, and buy from you. A gatekeeper is the person who controls access to the decision maker in a company. They're not the ones who sign off on the deal, but they decide whether your call, email, or proposal even makes it to the right person. Your goal is to get to decision makers. Check out my video, The Ultimate Guide to Sales Funnels for Consultants, for tips of working with and working around gatekeepers. Lifetime value or customer lifetime value. How much revenue you can expect to generate from an average customer or a specific segment of customers long term, including the original transaction and beyond. You won't have a great idea of lifetime value or LTV when you first start your business. That's okay. You'll develop it over time. The next one, which means that you are making some progress in sales, quote, proposal, or statement of work. These are all variations of the document that tells a prospect what you're offering, the delivery timeline, and how much it will cost. A pro tip: in your statement of work SOW template, don't forget to include a section on the client's responsibilities and also a very important section on what's not included. See, the more defined the SOW is, the less chance you'll run into the scope creep scenario I covered earlier, and then the more profit you'll make. Upselling and cross-selling. Selling complementary or higher ticket offerings during or after the purchase of the initial offering. Basically, upsell is bigger version. Think upgrading to a premium package. And cross-sell is side dish. Think adding a related service alongside. Formal and informal pitch. An informal pitch can happen pretty much anytime, anywhere. When you're at the gym, at a networking event, or even at a wedding. A formal pitch can sometimes follow a successful informal pitch and usually involves a much more detailed presentation and a more specific call to action. A pro tip here: when I say the word pitch, I don't mean that you go and start hard pitching and telling people what you do without paying attention to their needs, to their pain points, and without actively listening to what is it that they're trying to solve. Your job as a new business owner, as a consultant, is to be very attentive in listening and understanding the pain points of the clients and then sharing with them how you can solve their problems. Now, if you've already done some pitching or started some conversations with leads, what is the most interesting place, occasion, or situation you pitched your offering? I mentioned weddings earlier, and that's a story for another time. Next, request for proposal, request for quote, request for information, RFP, RFQ, RFI. These terms are purely B2B, and they are really important. They're about the times that larger companies put a notice out to the world, basically saying, hey, we need something. Tell me if your company can provide it. RFP is the most detailed and also the most common. The other company is looking for a full proposal, including pretty in-depth information about your company, the services that you can provide, and pricing. RFQ is similar, but the other company is looking for a more streamlined outline, but still pretty complete details on pricing. RFIs are issued the least frequently of the three. Here, the company is looking for information about your company and capabilities, maybe in a specific area, without necessarily a detailed service delivery plan or pricing. Purchase order, PO, also B2B on this one. POs are music to your ears. This is the document that really means that your prospect is ready to close the deal and give you money. Procurement, purchasing, B2B here too. It is the department that, in some companies, needs to approve a deal that another department has signed off on. A pro tip here: try to find out at some point in the sales process if procurement will be involved so you can plan for the deal to potentially take longer to fully close and also to prepare for the type of documentation that they'll be looking for. And speaking of purchasing, I'm not asking you to buy anything, but take a second and hit the like button, share the video, and subscribe to the channel. It helps me reach more people and helps more entrepreneurs chase their dreams, and I would appreciate it. Boom, you've closed a deal. Congratulations. Now it's time to fulfill the terms of the proposal and deliver the services that you have sold. Kickoff meeting and client onboarding. The process of orienting a new client. This typically involves team introductions and walkthroughs of the delivery process. Deliverables. These are the concrete assets that you deliver to your client. For instance, if your company is performing a financial audit for a client, a deliverable would be the audit report and cash flow improvement recommendations. Implementation. The steps in setting up technology, a system, or a process for your client. In some cases, especially in tech-related services, implementation can account for much or most of the service that you deliver. Pro tip: if you're only thinking of offering implementation services as one revenue stream, think of complementary services such as audit, training, maintenance, and ongoing support to provide more value to your client and to generate more revenue and profits for you. Key performance indicator, KPI. Any metric, meaning any number that tells you how an important part of your business is doing. Examples could be the number of website visitors, your average project duration, the number of leads you're getting, or your monthly revenue. Which of these terms have you already heard without really knowing what it meant? For me, when I started, most, if not all of these terms were unknown to me. What about you? Share in the comments. Finance and accounting. As a founder, you're definitely going to need to learn a few finance terms so you can manage the business properly and also work effectively with the accounting professionals. I encourage all founders to seek out very early in any new venture. Accounts receivable, AR, accounts payable. Receivable, you have people, customers, owe you money and you receive it. Payables, you have contractors, vendors, suppliers that you owe them money and you pay it out. I'll probably fail a CPA test with these definitions, but that's how I make sense of accounts receivable and accounts payable. Now, if you're totally new to accounting, I have a full playlist on accounting terms, how to work with accountants, how to look at the numbers, what to do with the numbers, when to get a CFO in. So check it out to learn the basics of managing your numbers. Because if you don't manage your numbers, you can't really grow a business. Return on investment, ROI. The amount of money you make relative to the amount you spend. This term is used often, but not exclusively in marketing. Sometimes it's based on revenue and sometimes on profit margin. Bootstrapping means starting a company without taking any outside funding. Yes. It's sometimes used to mean not even taking any loans. Equity, ownership of the company. If you're the sole owner, you have 100% equity. If you have a business partner or an investor, you might have 70% equity and the partner or the investor might have 30%. Pro tip: equity is the most expensive currency you'll ever spend. Once it's gone, it's gone. Leveraging tech and AI. Anyone in business is also at least a little bit in tech. Let's review some key terms. Customer Relationship Management, CRM. This is a system where you keep track of sales and marketing information about the leads, about the deals, about the contracts, including your contact with them, so you can keep the sales process and all the associated activities in sales and marketing organized and customized. Now, you don't need to buy a CRM on day one. I have a DIY CRM for you. See the link in the description. But over time, say after 100 or so qualified leads in your DIY CRM, it'll be time to choose a CRM. Check out the link on all things CRM in the description as well. Marketing automation. This usually refers to email sequences that you send after a visitor to your website submits a form or comes back and views specific pages. You can also use email sequencing and automation in cold emailing and other email outreach activities. Specialized GPTs. you might already be using tools like Gemini, Claude, or ChatGPT. You can also find specialized GPTs, custom versions designed for specific purposes like programming, creating study guides, or market research. On top of ChatGPT, the GPT meaning generative pre-trained transformer, you can also build your own, even more customized GPTs on OpenAI for more particular purposes. Chatbot. These are the little chat windows that you see a lot nowadays on websites and that can answer a lot of questions. This was a little piece of AI before people started calling it that. Application Programming Interface, API. You might come across this term. This is just to describe a way that you can access a system's backend and functions such as accounting, social media, or maybe website analytics. You can do that through code instead of through a user interface, so you can perform additional tasks and analysis. Very useful for integrating systems and automating time-consuming processes. Cloud storage. This refers to storing your business data on a third-party platform in the cloud, usually Amazon S3, Microsoft Azure, or Google Cloud. Azure, I'm not sure, but storing your data in the cloud, as opposed to on-prem, meaning your company's own premises. And SaaS, software as a service, like cloud storage, but for software. Salesforce, the Google Office suite, and countless thousands of other offerings are now available as SaaS. We did it. Those were the 50 terms that every entrepreneur must master. I know that was a lot, but now you're in the know, and you'll never have to feel like an outsider in those business conversations again. Remember to click on the description to get a copy of the Fluent in Business cheat sheet and customize it for your own business. You'll find the link below. And remember to hit the like button, share the video, and subscribe to the channel. I would truly appreciate it. And if you want to go beyond the terms and actually learn the step-by-step process of starting a consulting business this year, check out my video, The Ultimate Guide to Starting a Consulting Business, right here.